Today, we're diving into a really fascinating signal coming out of the Korean market. And honestly, it might just be the most reliable indicator we have for the future of Wall Street's AI boom. It's kind of like a truth serum for all the hype. So, let's get right into it. Okay, so check this out. It all kicks off with something that at first glance makes absolutely no sense. You've got the South Korean currency taking a nosedive against the dollar, which should send investors running for the hills, right? But at the exact same time, their main stock market index, it actually went up. So yeah, what on earth is going on here? And this really lays out the whole puzzle for you. I mean, look at that. The Korean won down, and not by a little bit. But then you look over at the KOSPI stock index, and it's solidly in the green. Now, normally, these two things should be moving in completely opposite directions. A falling currency usually spells big trouble for stocks. So we've got a real mystery on our hands. All right, so to crack this thing open, let's start with the surface story. You know, the obvious, textbook explanation for what went down. So the conventional wisdom here is pretty straightforward. Imagine you're an investor from, say, New York, and you own a bunch of Korean stocks. Well, if the Korean won suddenly loses value, all your investments are worth less when you convert them back into dollars. The logical move? You sell everything and get your money out of there fast before it gets any worse. And here's the wild part. That first piece of the theory? It actually happened. You can see right here, foreign investors were selling. They were heading for the exits. But look at this. Local institutions just came in and completely swamped them with a massive buying spree. They basically said, we'll take it all. And that's what pushed the whole market higher. Okay, but hold on. That tells us how the market went up, but it doesn't really explain the why. And that's the important part. The real story, that hidden signal we're hunting for, it's not in the big picture numbers. It's buried way deeper in the details of exactly what was being bought and sold. So let's do that. Let's follow the smart money. It's time to dig past those headlines and see where the cash was really going. And this brings us to the key question. Even as foreign money was flowing out of the market as a whole, some of that money stayed. And it was very, very picky about where it went. So what were these specific companies that were so irresistible they made investors completely ignore a currency meltdown? And the answer is probably not what you'd expect. The big winners of the day weren't some flashy tech darlings. Nope, it was the old-school heavy industrial giants. We're talking Hanwha Ocean, that's shipbuilding and defense, up a whopping 8.4%. And Doosan Enerbility, a company that builds power infrastructure, jumped over 4%. These are the companies that make the big physical stuff that actually runs the world. Just think about that for a second. When a company that literally builds giant ships and defense systems has its stock pop like this, that isn't just random market chatter. That's a huge flare going up, signaling that someone somewhere is placing massive real-world orders. This isn't hype. This is as tangible as it gets. So what could possibly be driving this much demand for old-school industrial muscle? Well, believe it or not, it all comes back to AI. The entire AI revolution is built on these incredibly powerful and incredibly power-hungry computer chips. And to keep these things running and cool, you need a mind-boggling amount of new infrastructure. I'm talking brand new data centers, upgraded power grids, the whole shebang. And that's the connection. All those digital dreams translate directly into hard purchase orders for the companies that build all that physical gear. We're not talking about code or algorithms anymore. We're talking about steel, concrete, giant turbines, and transformers. This is where the AI boom gets its hands dirty. And that right there brings us to the core thesis of this whole explainer. We're calling it the truth serum thesis. So what is this truth serum thesis? Well, it's pretty simple, actually. You know how big tech companies in the US are always promising to spend billions and billions on AI? Talk is cheap, right? How do we know if they're actually spending that money? The answer is we watch their suppliers. The performance of these Korean industrial companies acts like a truth serum. If their stocks are booming, it means the purchase orders are real. It's verification that all that promised capital expenditure, or Capex, is actually happening. Let's break it down into 4 easy steps. Step 1. A US tech giant pledges to spend a ton of money on AI. Step 2. A Korean supplier gets the actual purchase order for a new power grid or whatever. Step 3, that supplier's stock rallies, which is our proof that the spending is real. And finally, step 4, that becomes a powerful proxy or signal for related industrial stocks right here in the US. Okay, so now for the big payoff. How do we take this signal all the way from Korea and actually apply it to what's happening on Wall Street? It really is about following the flow of goods. Just picture it. These real physical products, turbines, generators, you name it, they're leaving the massive ports in Korea, and their journey is directly linked to the stock tickers you see on Wall Street. It's a signal that's literally crossing the Pacific Ocean. And this chart here makes that connection crystal clear. So when you see a stock like Korea's Doosan Enerbility taking off, that's a direct signal for US companies in the data center, power, and cooling business. Think companies like Vertiv or Eaton. And when Hanwha Ocean surges, that points to strength in American power generation and defense stocks, like a GE Vernova or an RTX. So what's the bottom line here? What's the big takeaway for you? Here's the most important part of this whole thing. The fact that these heavy industrial stocks went up even when the currency was going down, that's maybe the strongest proof you could ask for. It tells us the AI infrastructure boom isn't just hype or a nice story. It is absolutely real, the money is flowing, and those orders are being placed as we speak. And that really leaves us with one final, powerful idea. If you ever want to know if Wall Street's biggest promises are actually coming true, don't just listen to the CEOs giving speeches. Watch the Asian supply chain, because that is the ultimate truth serum. The question is, what signal will you be looking for now?